Happy early Mother's Day, everyone. This is quite a present for your mother. If you're into cryptos, we are seeing the continued downside action across pretty much every coin. We had quite a maelstrom across pretty much every asset class over the past couple of weeks. Stock markets, of course, have been leading most of the news, but cryptos have also been pulling back decisively over the past few days. And many of these cryptos have broken their supports. This is, of course, an update on Stellar Lumens, and it too has support set up. But just to summarize where we were and what we were looking at, we had a low that we hit on February 24th, and most of our coins hit their lows on February 24th. A couple of them, like Bitcoin, Ethereum, and Ethereum Classic, hit their lows on January 22nd or January 24th, and a few coins had double bottoms. But point being that we had been counting 3 waves up with a 4th wave down, and we're looking for a 5th wave higher to give us a leading diagonal setup. And instead, we've taken a turn for the worse, and our support sits at about 16 cents, 16.5 cents. That's what this red line is. And I have an alert set. Many of our coins have already broken their supports, which again is the low that they hit earlier in the year. I mentioned earlier in the week that we had Polygon, Chainlink, and Shiba Inu break their supports. We have since had several other coins follow through. Polkadot is one of them. We had Solana break its support, and then we had Litecoin as well. And Bitcoin is already well on its way. When we look at Stellar Lumens, we are within spitting distance. I wouldn't say spitting distance. We are within kissing distance of our 16.1 cent mark. So this is all but done. And I'm very strongly in the camp that we are falling through on red because, again, all the crypto coins, no matter how we look at them, have been following similar patterns. No matter how much you like or dislike a crypto, they're all following the same sentiment. They're all moving together. So now that we've had a good handful of coins break their supports and other ones that are close to doing so, I fully expect us to follow through on our red pattern. Now, that doesn't mean it's guaranteed. If we see a sharp reversal at any point in the next couple of days, that could mark a quick ending. But remember, we do not call a bottom until we see a sign of a bottom. So unless we see a very clear impulse 5 waves up, then, well, our primary pattern will remain red. So as of this update, I'd say probably within the next few hours, we're just about to invalidate this diagonal, which is more or less invalidated anyway. We've gone too deep for a 4th wave. And second we break our 16.1 cent support, I would expect us to go down into the maybe 13 cent range, maybe as far down as 12 cents for our 3rd wave of this larger C wave down with an ultimate bottom around 10 cents. Now, this is the linear chart, so it does project a little bit differently from our logarithmic daily chart. So we're going to look at this. This is, again, the logarithmic daily chart, and our projections are, well, our box is calling for a low right around 10 cents. That is the top of the box. So there is confluence between what we're seeing in the short-term picture and where we have a 1st wave down, a 2nd wave where we had a really good bounce, perfect, just about a 50% retrace, and our fibs are targeting right to the top of that box. So 10-cent box. In addition, when we take our equivalence of what we're calling our A wave off of our spring 2021 high, and we use our B wave bounce as the other reference point, that is the 1-to-1 ratio. That's how I drew this pink box for support. So that is where we are targeting. Again, no guarantees we're going to get all the way down there. We could. If it does happen, I would expect a very spike-like crash with a very sharp reversal. That's what we have seen throughout the history of Stellar Lumens, and it's been the case for most of the altcoins. They are a little bit more volatile. They seem to have quick direction changes. We see a little bit of a parabolic top here. That's a green candle, but we saw a bit of a red candle situation in some of these other pullbacks, and all of them have had very sharp reversals subsequent to that. And so I'm sure you've already read the captions here. Red is now my primary, although, I mean, there is a small chance we don't break the support, but again, I fully expect to go there. So unless we see something drastic in the other direction, red is primary. So does that mean that the bull market is over and that we're all doomed? Not in the least. We are closer to the bottom than we are to the top. I keep seeing comments in my videos how the crypto bull market is over and that cryptos are dead forever. We heard the same thing in 2020 for cryptos and equities and pretty much everything else. This is usually a pretty good indicator that we're getting near the bottom. Not to sound arrogant, but that's how bottoms work. So what is my advice to anyone who is in the coins? Well, I have already informed everyone that I did unload half my positions about almost 2 weeks ago now. I do not intend to sell the other half because my concern is that these things spike down and reverse so quickly, you can often miss the bottom. So I have bought some hedges. I create a video on using the BTO ETF, using put options to hedge yourself. So check that video out if you're interested. But I expect to drop the half that cash I pulled out into a buy whenever we hit the box. And as for the continuation of the bull market, in the case of Stellar Lumens, I'm looking at this as very likely a second wave, or this could be a big A wave and a B wave with a C wave coming to finish our large diagonal pattern. I'm actually going to draw that to illustrate what's going on here. So when we do that, our 2020 bottom would possibly be an A wave. From there to there would be an A wave, B wave into the box maybe, and our C wave could top wherever we're expecting to top. Could be a heck of a ride. So it would be a nice impulse or diagonal kind of pattern. Whatever it is, it's probably going to be a 5-wave pattern, and it would make some sense big picture because of the depth of this correction and the fact that our blue nomenclature does show that this looks like it fits a zigzag pattern better. So again, for the upside rally, it's not really a bad thing, but it does give us a more clear point of reference. So why am I jumping ahead to the rally ahead? Well, if you're going to plan to buy the dip and you want to ride it, you better start thinking about it before you hit the bottom. You don't catch, nobody can really catch the bottom perfectly. Sometimes you do. That's not the goal. The goal is to keep your eyes open on the prize. We haven't invalidated anything yet. Bitcoin, Ethereum, they have a lot of cushion below before they get to any major supports. The only coin that we're worried about possibly getting close to a major support is EOS. I've talked about that numerous times in our various EOS updates. Stellar's looking just fine. A very deep retrace would be the standard expectation. Again, if this is actually a big zigzag pattern, as I illustrated earlier. So once we hit this box, our upside projections are actually not going to change very much. Let's assume that we hit about the 10-cent mark for our bottom. I would expect that's about a 61.8% retrace. So it makes a lot of sense from a standard Fibonacci perspective. If you have an A wave up and a B wave down, that's about how deep you'd expect it to go. And C waves, in at least more of a rally structure, they almost always go well beyond the 1.0 extension. So imagine this getting the 10-cent mark, and we could top somewhere north of 329, could get to 738. 12.17, those are all tops. There is that major confluence zone up here around $20. So I'm just giving you guys some perspective on what things could look like. We're seeing the same kind of thing in equities. This is an absolute mess. So apologies for that. I have all sorts of things going on this page, but we are, if we haven't already bottomed, we're getting very close. We might see another turn back down. And in the big picture for the Dow, we have a lot of rally potential ahead of us. I'm going to zoom out a little bit. The reason I bring this up is because cryptos and equities have been moving together very closely. I'm going to take the drawings off again because it's a mess. So this is basically a large fourth wave, possibly an expanded flat correction with a very complicated back end of this thing. Once we bottom, we have an enormous fifth wave to go. When we look at the MACD, major divergence forming. It is no different from what we're seeing in cryptos. I had this up a second ago. The divergence is still there. Not sure if we're going to maintain it through any kind of downward movements, but if we have enough whipsaw, a lot of back and forth, that could be enough to preserve our divergence, in which your price drops and your MACD gets less and less stretched to the downside. So a lot of excitement ahead, a lot of signs of bottoming, but things may get a little worse before they're over. I'd say that maybe the past several days we were kind of in the eye of the hurricane, and now we're getting the backside of the hurricane before things end. So get your buying plans ready. If you really need that money for something else, probably should have sold coins a few days ago. I wouldn't advise selling right now, but you do you. Gonna have plenty more updates. Subscribe so that you don't miss those. And until next time, thank you for watching and happy trading.